Okay, welcome guys. On today's lesson, we're going to be doing the DBE. We're still on the DBE paper, DBE 2021, and we're going to be doing question number 4. Question number 4, which is all about stock valuation. Surely this is chapter for term 2, so I believe you have done it in your school. Yeah, so this is a chapter for term 2, stock valuation. We'll just go through the questions one by one and make sure you'll be using this video for your practicing. Like when you find any difficulties, just get back to this video, watch it, so that you will understand where you are finding any difficulties. Okay, let's go guys. Okay, so first question, they're saying choose the correct words from those given in brackets. Write only the words next to the question number. 4.1.1 up to 4.1.4 in the answer book. So this is the answer book we're going to be using. We're going to be using this answer book from DBE 2021, and I downloaded this question paper from stanmorephysics.com. You can write down the website again. It's stanmorephysics.com. That's why I downloaded it. You can download it again so that you can just practice with it and also refer to the video. Yeah, so let's get to the question paper. Okay, 4.1.1, they mean we have to choose one here. They say the specific identification method or the first in first out method assumes that the closing stock is valued at the most recent batches purchased. Surely you know the one that values closing stock at the most recent batches. You know very well that one is the first in first out method, which means the first stock that we purchased is the last stock that we are going to sell, and stock is valued at the most recent prices. We assume that the last stock is the last stock to be sold, so we assume that we value all our stock using the most recent prices. Okay, so it will be first in first out method. Put it in our answer book. So it will be the Fifo method. That's it. Now let's move on to the second one. Second one, they are saying the periodic or the perpetual system requires that a year-end stock count need to be able, but they say the periodic or the perpetual system requires that a year-end stock count. Okay, the periodic or perpetual requires a year-end stock count to be able to calculate the cost of sales. Okay, so we know we are able to identify the cost of sales on perpetual every time when we are making a sale. On perpetual, we are perpetually able every time we are able. But with the periodic, we have to wait up until the end of the period for us to be able to calculate cost of sales. But with perpetual, we are able to calculate. We are always in a perpetual state of being able to calculate. That's why they call it perpetual. Okay, so here the one that requires a year-end stock count, the one that means we have to calculate stock at the end of the year. Which one is that? It's obvious. The one that requires calculation of stock at the end of the year is what? Is the periodic. We calculate stock at the end of the period. That's the periodic. So the answer is periodic. Let's put it in our answer book. Periodic. Then let's move to the next question. Next question, 4.1.3, they are saying the weighted or the first in first out method is suitable for similar goods that are bought in bulk. The one that is suitable for goods that are bought in bulk, we know it's what? is the weighted average method. Because when goods are bought in bulk, it means those goods are a lot. They are too much. So we cannot be able to use the first in, first out on goods that are bought in bulk. We will be getting tired calculating the first in and first out. We will not be able to even identify which one was the first to go in, which one was the first to go out. Like tennis balls. Tennis balls, you cannot be able to see which ball was purchased first, which ball was purchased last, because tennis balls are usually purchased in bulk. They are a lot. So in order to calculate the value, we have to use the averages. Averages meaning we take the total and divide by the number of units so that we can get the average. Average meaning these things are too much, man. So we have to summarize it and get the average. Averaging means to summarize. We are summarizing the value using the prices of all the goods, averaging. So because there are too many, we cannot calculate one by one. So it's suitable for similar goods like tennis that are bought in bulk. Bought in bulk meaning they are bought as many. So the one is the weighted average method. Okay, so 4.1.3, we're going to say it's weighted average method. Weighted average method, where the goods are bought in bulk. Where the goods are bought in bulk, we're using the weighted average method. You can use your criminology if you want, if you don't understand these things. Okay, now let's go to 4.1.4. 4.1.4, they are saying the periodic or the perpetual system requires that all products are scanned at the point of sale. At the point of sale meaning every time when you are selling, you have to scan your product. Every time that you are selling, you have to scan the cost of your product. What is that? Obviously, when you are actually in a perpetual state of calculation, that's where we calculate every time, at every point of sale. When we are at a perpetual point of sale, perpetual point of calculation, like we're calculating every time, that's perpetual. But the periodic, we calculate at the end of the year. But here, all products are scanned at the point of sale. Point of sale meaning every time when we sell goods, we calculate what? We scan the product and we calculate everything. That is the perpetual. But periodic, the difference is we calculate at the end of the year. So it will be perpetual on our answer book. Perpetual. Now let's go to 4.2.1. Calculate the value of closing stock for 5 marks. Let's see which method. You know there are 3 methods of calculating the value of closing stock. There is the FIFO, first in, first out. There is number 2, the weighted average method. There is also the specific identification method. Go and revise all those methods. Know them because they are coming. Whether you like it or not, they are coming on your exam. Now let's go to that question. 4.2.1. Calculate the value. Calculate the following for the year. Okay, number 1, we're supposed to calculate the value of closing stock. The value of closing stock for the year. Now we don't know which method they are using here. They just told us calculate the value of closing stock without saying anything. First step, you have to know which method they are using. Which method they are using. They usually write that at the top of the information, like here, where they said the information relates to bags for the financial year ended 28 February 2021. The business uses the first in, first out method. So if you don't know where to find that information, just look at the information. Don't be lazy. That's where they will write which method you must use. As you can see here, they just said calculate the value of closing stock. Then now you become clueless. You don't know which method. It's simple. Read the information. That's where they are writing. The business uses the first in, first out method to determine the value of these bags. And then they also use the periodic system. So first in, first out. We know very well. I used to teach like this. There is step 1. Let me just use a separate paper to answer this. Value of closing stock using Fifo method. Value of closing stock using Fifo. So number one, there is step one. What do we do on step one? We calculate the units on hand. What are the units on hand? The units on hand, it means we have to calculate how many units of those, maybe tennis balls or whatsoever. Let's see what this business is producing. Oh, it's producing bags. This business is producing bags. So first step, we have to know how many units of bags are we having at the end of the year. That's step number one. We have to calculate the units on hand at the end of the year. Units on hand at the end of the year. And here is the formula for units on hand. You are saying opening plus purchases minus returns. So this will give you all the units that you are having in your business. Then now you have to minus sales or units sold, also known as units sold. You don't take the sales amount here, the rent value. You have to use units. We are using units. That's why step one is called calculate units on hand at the end of the year. We have to use the units. So we're saying our opening units plus the purchases minus the returns minus the sales. So that's step one. Now let's go to our information and look for all those things. Okay, I think this is our information. Information number A, we want opening. This is 1 March 2020. Stock balance is on 1 March 2020. How many units were we having? We had 420 units on 1 March 2020. And 1 March 2020 is the beginning of our year. So that is the opening. So the opening will be 420. Now the formula says plus purchases. Let's see how many units we purchased during the year. Okay. Purchases. So this is information B for purchases. Purchases. How much did we purchase? We purchased 500 units in June. We purchased 750 in October. We purchased 320 in February. Total purchases is 1,570, as you can see on your information. So now we take that information, we are going to put it on total purchases, 1,570. Bahlanganise all these three. So our purchases is 1,570. Now the formula for step one says minus returns. Let's see from our information if we do have returns. Do we have any returns? Let's see. Yes, we do. Here is returns. They said we returned 20 units. Okay, so our returns, we are going to say 20 minus 20. We minus the returns because they are no longer with us. Minus 20. Then now minus the last one. What do we minus? Sales or units sold. The units that we have sold. Let's see how many units that we have sold. Sales, this is information C. They said total sales amounted to 3,937.50. Don't get confused. On step one, you don't want the total sales. You want what? The units sold. They said open brackets 1,590 bags, which means we sold 1,590 bags. For how much? For 393,750. That's what we want. We don't want this rent value. We want the units. So we sold 1,590 bags. That's the units sold. Units sold, we're going to say minus 1,590. That's it. Let me quickly get my calculator. I'll be back soon. Okay, I'm back. So now let's calculate to get step number 1, which is calculate the units on hand. So let's go. Here's my calculator. We're having opening for 20 units plus purchases 1570 minus returns 20 minus sales 1590. So step 1, as you can see on our calculator, we are having 380 units. So let's put that. The answer is equals to 380 units left, which means at the end of the year we are left with 380 units. Now, before you even go further to step 2, before you go to step 2, there is one thing you are supposed to do before you go to step 2. Confirm that the answer that you got on step 1 is the same amount that they got when they calculated their units on hand at the end of the year. Let's see. At the end of the year, which is 28 February 2021, how many units are there? They are having 380 units. Is it the same as us when we calculated on our own? Yes, we are also finding out that we are having 380 units at the end of the year. So now what happens if these numbers are not the same? If this number that they gave you here, this 380, is not the same as your 380 here, what happens? What if they got 370 here? What do you do? And you got 380. It's very simple. Very, very simple. You just use what they have already given you. I'm teaching you how to do step 1 because I want you to know how to calculate on your own. Because sometimes they will not give you this amount. You have to calculate on your own. But if they have given you this amount, you have to use what they have given you. That's it. Make sure you understand that. So it's fortunate this time we also got 380. If we got 350 or 370 or 170, which will be different from theirs, we were supposed to use theirs. Don't get confused. We only use ours if it's the same as theirs, or if they did not give us theirs. We are supposed to use ours. Go and revise that again if you did not get it, because rushing after time. Go and revise that again, what I just said. Repeat the video again till you understand what I'm trying to say. Okay? Now let's go to step 2. Step 2, we have to calculate the value of closing stock. The value of closing stock. Calculate the value of closing stock. That's step 2. Now, there are methods on this calculation of value of closing stock. On this one, they said we must use what? The Fifo method. Okay? It's very simple. You take the answer that you got on step 1, which is 380 units. That's the answer that you got. Then you go to your last purchases. You want to find out where does this 380 purchases belong to according to the Fifo method. The Fifo method assumes that the stock that we bought first is the last stock that we are going to sell. Here's this thing that I'm talking about on our information here. Okay? The units. The first stock that we bought is on June. And it was how many units? 500. The Fifo method assumes that we have already sold this because it says first in, first out. So this was the first stock that we bought into our business. This will be the first stock that we sell out of our business, this 500. And the second one that we bought is what? October. We assume that since it's the second one, this is the second stock that is going to be sold. Now we go to the third one. We assume that this will be the last one that is going to be sold. That's the Fifo. So we're going to assume that the 320 is the last stock that is going to be sold. Okay. Okay, let's move on. So all in all, what I'm trying to say here, when it comes to FIFO, just look at your last purchases. Look at your last purchases. So our last purchases, it was how many units? It was 15 February, and it was how many units? It was 320 units. So which means we are going to use that 320 units. Do you get that? Okay. Now, before you even go further, you just take your 320 units, okay? You write it down. You say it belongs to which month? To February, ne? Okay, let's write it down. We say in February, we had 320 units. That's our last purchases in February. That's the thing you have to always, if you don't understand, just cram. This is what you are supposed to do so that you can pass. This is the last purchases, 320 units. Then before you multiply by this price, by this one, you are supposed to subtract if there are returns. Take note of that. Before you multiply by this, you are supposed to subtract if there are any returns available. On this one, are there any returns? Yes, there are. We can see there are 20 units returned. There are 20 units returned. And we have to subtract the 20 units. Okay? So we're going to say, okay, in February, first of all, before we subtract the 20 units, let's go back a bit. Before we subtract the 20 units, we are supposed to know where does these 20 units belong? To which month do they belong? If you can see here, they did not write where does these 20 units belong. They just said 20 units returned, and then the total price for those units was 3,700. You see? Now, that's a problem. In other activities, they usually tell us 20 units were returns from maybe February or October or June. They write here in brackets. But on this one, we don't know where these 20 units returns are coming from. If they are coming from February, which means we have to take the 320 of us that we have wrote here. We have to take this 320 that we have wrote here and minus 20. But now we are not sure if these 20 units returned are from February. Let's find out where are they from. These 20 units returned, where are they from? Okay, let's find out. So they said it's 20 units, and then the total price is 3.7. So let's simply say 3.7 on our calculator. Let's simply say 3.7 divide by 20. Then we are getting 185. And if you check here, there is no unit price return 185 as per our calculator. There is no unit price return 185. Why is that? It's because they said the total cost is including carriages, and this unit cost is not including carriages, which means now this one is including carriages. We have to remove the carriages so that we know where it belongs. How do we find out the carriages now? It's simple. Just say 3.7 over 20 units. It gives you 185. Now take that 185 and minus each and every carriage here. Do you get it? No, you don't get it. It's gonna be difficult like this. Let me try to find a way that we can easily know where these 3.7 units belong. We can say 20. Okay, we can say 20 units. 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 Okay, we can say 20 units 20 times 15. Okay. Okay. We can simply say, okay, 3.7. Actually, what we want here is we want to find out where does this 20 units belong. And they did not tell us where it belongs. It's simple. But I'm trying to find out the easiest way for you to get it and understand it. But it's simple. We can simply say on our calculator 3.7 divide by the 20 units. Divide by 20. Excuse me. So we find out that we have 185 rands per unit. That's it on our calculator. We have 185 rand per unit. Now, there is no 185 rand here. When we say the total returns divide by 20 units, it's supposed to give us a unit price that is equal to any of these that we have here. But here it is giving us 185. And 185 does not belong anywhere here. There is 155, there is 160, there is 170. Now, why is it 185 here? It's simple. It's because they have included the carriages here. So we have to minus each and every carriage here up until we get an amount that is equals to any of this amount. So we are going to say 185. The first carriage is what? 15. Minus 15. 185 minus 15. And we're going to get 170. Now, 170. Why do we minus 15? It's because they said this total here that we divided with the 20. This total, it includes carriage. And these ones, they do not include carriage. So we're supposed to minus the carriage, minus 15. And then we get 170. Now you check. Is there any 170 here on your unit cost? Yes, there is 170. Where is it? On February. There is 170. Now, what does that tell you? It simply tells you that the carriage that we are using, it simply tells you that the carriage that we used was from February. And since it gives us 170, it simply tells us that these returns are from February. You get it? It simply tells us that these returns are from February. Okay? They simply say 20 times. They say 20 times. How much is the price for February? 170. Then they added the 15 plus 15, which means they simply said 20 times 170. 70 plus 15. 20 times 185. Then it gave them 3.7. They simply said 20 times 185 and it gave them 3.7. So now we know what these 20 units returns are from February. That's how I got it. Go and revise. I know I've spent a lot of time on this one. It's simple, but I wanted to make sure that you understand each and every bit of where I got the amounts. Very cool. Let me close here. Okay. It's fine. All right. So now we know that the 20 units, they belong from February. Now back to our step 2. We know with February, we had purchases of how much? February, our last purchases were 320. So we're going to say our last purchases is 320 minus any returns. Are there any returns in February? Yes, there are returns. How much? 20, because we know with the 20 units, they belong on February. Because in this activity, they did not tell us where they belong. On some other activities, they will tell us Now we found it out on our own that these 20 units, they belong in February. So if they belong in February, we minus them on February. So we're going to say 320 minus 20. So in February, we're left with 300 units. So we're going to say 300 units in February multiplied by the price of February. That's step 2. 300 units left in February after we've subtracted the returns. Minus 20 returns, we're left with 300. So we multiply by the unit price yango February. How much is the unit price for February? February, the unit cost is how much? February, the unit cost is 170. So we're going to multiply by 170, which is our last purchases. Multiply by 170. So how much do we get? Step 2, we're going to say 300 times 170. We're going to get, let's see, the price, the value of those 300 units is how much? Is 51,000 rands. The value of those 300 units is actually 51,000 rands. Now, let's move on. Now we know from the 380 units that we got on step 1, from the 380 units that we got on step 1, we know what's 300. They belong on February. So now what's next? Therefore, what's the next month after February? What's the next purchases after February? Okay, after February, we had what on our information? We had October. That's the next purchases after February. Is what? October. So we know it's now. The next purchases will be October. How much will they be? We know it's the 380 that we had. We know now it's 300. We have used it in February. So now we are left with how much? In October, which means we are left with how much? With 80. 300 minus 380. 380 minus 300, we are left with 80. So in October, we are left with 80. And there are no returns in October. So how much is the price for October? The price for October is 160. So we're going to use it now. So we're going to say 80 that is left multiplied by 160. 80 multiplied by 160. Supposed to give us 12,800. Now that's Fifo method for you. Now you totalize this one plus. Okay, let's put it on our answer book. On our answer book, you must only write step 2. Ne? Do not write step 1 on your answer book. Only write step 2. So we're going to write step 2. We said we were left with 380 units. Okay, on step 1, we're left with 380 units. I'm repeating again. So from those 380 units, we know which this 20 belongs to. From those 380 units, we're supposed to now look at our last purchases, which is February. Our last purchases is February. And how many were the units in February? They are 320. So we say, okay, February is equals to 320 minus. Are there any returns in February? Yes, we found out the 20 units returned are from February. So we're going to minus 20 in February. Minus 20. So in February, we are left with how much? We are left with 320 minus 20. We are left with 300 in February. So we take the 300 that's left in February, multiply by the unit cost on February. Let's get the unit cost on February. These are the unit costs. February, the unit cost is how much? 170. So we're going to multiply by 170 and we're going to get the total price. That's it. That's how you do February. Now, for the following month, you're going to say, okay, out of the 380 here, out of the 380, we now know what we have used how much? Minus 300 for calculating February. So out of the 380 that we have left with, we have already calculated 300 rand. 300 units for February. So how many units are we left with to calculate? We are left with 80 units to calculate out of the 380 that we had. Now, these 80 units that are left, now they belong in the following month. The following purchases after February is what? Is October. And how many units? There were 750. Ne? We're not going to use that 750. We're going to use that 80 that we are left with here. That 80 that we are left with here. We're going to say, okay, it's how much? The unit price for October is 160. Unit price for October. So we assume the next purchases after February is October. So in October, we are left with only 80 units multiplied by the unit cost for October. What's the unit cost for October? October, the unit cost is 160. 160. That's the unit cost for October. 160. Now, 80 times 160, you are going to get the total. Now, let's get all the totals starting from the February one. The February one, it was how much? It was 300 times 170. Then we got 51,000. 51,000. Now, let's go to the October one. October, we had 80 units remaining times the unit cost of October, which is 160. That's the unit cost in October. So in October, we are left with 12,800. Now we're supposed to combine these two. We're supposed to add these two. We're going to say 51,000 plus 12,800. We're going to left with how much? 51,000 plus 12,800. We're going to be having the value of closing stock, which is 63,800. That's the whole process. I was as low as possible. If you did not understand, go back and revise the video to see how I did this. Now, let's calculate what? The cost of sales. Let's calculate the cost of sales. There is one formula for cost of sales. It says opening plus purchases minus returns minus. Okay, after we've done this, we find out actually this is the stock that we had. So now we take the stock that we had minus the value of closing stock. This will help us get the stock that we have sold, the value of the stock that we have sold, the cost of the stock that we have sold. This is the formula. The stock that we have opened with, but plus the stock that we have purchased during the year, it makes the stock that we had, all the stock that we had. Now minus the stock that we returned. This will give us the net stock that we are having. Now the net stock that we are having minus the value of the stock that we have as a closing stock. This will automatically give us what? The cost of the stock that we have sold, also known as the cost of sales. That's the formula for cost of sales. Know it in your mind. That's the formula for cost of sales. Now, in cost of sales, we are not using units. We are using rands. Now, let's go look at our opening rands. Our opening information. Opening is 1 March 2020. the total value including carriage, ne? Okay, so the total value including carriage is 68,120. 68,120. That's our opening. So our opening is 68,120. I have used the rands. Don't forget, you are using rands to calculate cost of sales. Cost of sales is a rand value. It's a cost. It's not a unit. Plus purchases. Let's go check our purchases value or our rands of the rands value of our purchases. This is the purchases information on information number B. Total purchases. They've added 83,500 from June, 129,750 from October, 59,200 from February. This gives us the total purchases of 272,450. So note that they said these purchases are including what? Carriage. Also here they said they are including carriage. In some other activities, they may not include carriage for you, which means it will be your job to now calculate or add the carriage on every formula. Know that every purchases have to go with carriage. Every purchases have to go with carriage. You have to add carriage on every purchase. So here, they have already added carriages on our units. They have already added carriages on our purchases. So the carriage on our purchases is 272,450, including the total purchases, 272,450. So we write it all, plus 272,450. It has included carriage. If it did not include carriage, you're supposed to add plus carriage here and add the carriage. Now they said it includes carriage, so not stress. Now minus returns. Remember they said we returned 20 units and the total value for those returns is how much? 3.7 including carriage. So the total value for our returns is 3.7. We're supposed to minus 3.7. You don't minus 20 units. You are minusing 3.7. So minus returns 3.7. Then the formula goes on and say minus value of closing stock. This one you have calculated. They will not give you this one. You calculate it on your own. Value of closing stock. So the value of closing stock, we have calculated it in 4.2.1, where they said calculate the value of closing stock. We used the Fifo method. Okay, so the value of closing stock, we found out it's 63,000 minus 63,800. That's the formula for cost of sales. Even if it's wrong, even if you know you did not write the correct thing here, just take it as it is and subtract it here. It will give you the value of closing stock. That value of closing stock will give you a part mark here. Even if it's wrong, they will give you a mark because you know how to use the process or how to follow the procedure. They will give you operation marks and part marks just for following the correct rules and procedures. So we are supposed to minus the value of closing stock that we calculated here, whether it's wrong or right. Now let's calculate. We are done with our formula. We got our opening of 68,000, opening of 68,120. Then we got our purchases plus purchases of 272,450. Then we got our returns, total returns of 3,700. We minus returns 3,700 minus value of closing stock 63,800. That's your formula for cost of sales. And your cost of sales is equals to, as per our calculator, is equals to 273 and 70. So our cost of sales is equals to 273 and 70. You are done with your cost of sales. Take it slow, don't rush. Just keep on practicing so that these things will remain in your mind. Keep on practicing so that these things will remain in your mind. And don't forget to download the paper here at stanmorephysics.com so that you can use it to practice as well. Now 4.2.2, they are saying calculate the average stock holding period in days. Average stock holding period in days. This is one thing that will always be there, whether you like it or you don't like it. It's your duty to know the formula to calculate the stock holding period. I will give it to you now. Just know it. So the formula, when they say calculate the average stock holding period, they mean you have to take stock from last year, which is the opening stock, plus the closing stock, which is this one, the value of closing stock here, the value of closing stock. So you take your opening stock plus your closing stock, which is the value of closing stock, divide by the cost of sales, which you have used here or you have calculated here, times 365. If you check all the amounts here that you are supposed to use here, you have already done them here, you have done them here. Now it's just copy and paste. No matter how wrong they are, take them and use them, you will get marks. Take them and use them as they are. No matter, even if they are wrong, take them and use them, you will get marks. Sometimes the question will come and say, calculate the stock holding period in days, use closing stock. Once they say use closing stock, take note of that. It's very important. Once they say use closing stock, you don't have to take last year plus this year to get average. When they say use closing stock, they simply mean use the value of closing stock divided by cost of sales only, nothing else. But when they say calculate the average stock holding period, without saying use closing stock, you know, I did teach you in cash flow that to get average, we simply take last year plus this year divide by 2. You still remember that? Okay, let's continue. Now let's calculate the average stock holding period. The formula says average stock divide by cost of sales. Cost of sales times 365 days. They said in days. So average stock, we have to take stock osanini last year plus this year over 2. And to get average stock, you take stock from last year plus this year over 2. I'm going to do the average stock over here on the side. So average stock, let's start with the stocks last year. Stocks last year, we mean the opening stock. Last year, 1 March 2020, the opening stock was, the value of our opening stock was how much? 68,120. So that's our opening stock. That's stock for last year. 68,120 plus opening stock 68,120 plus closing stock. They did not give us. Remember what I told you? I said you have already calculated it here when they say calculate the value of closing stock, which is 63,800. So last year it's 68,120. This year it's 63,800. No matter how wrong it is, just take it as it is, plus 63,800 divide by 2. So it is going to be 68,120 plus 63,800. So plus 63,800 divide by 2. So our average stock will be 65,960. So our average stock will be 65,960. Now back to our formula. Our average stock is 65,960. Divide by cost of sales. That's what the formula says. It says average stock divide by cost of sales. So we have already calculated our average stock. We took the opening which is from last year, plus closing stock, value of closing stock, which is this one. Then the total we divided by 2. So we got average stock of 65,960. Now we take our average stock of 65,960 divide by cost of sales. So the very same cost of sales, we have calculated it to be 273 and 70. So we're going to divide by 273 and 70. That's our cost of sales. No matter how wrong your cost of sales is, just take it and divide by it. Now we're going to multiply by 365 days in a year. So how much will be our stock holding period? Just punch the calculator. 65,960 divide by cost of sales of 273 and 70. That's our cost of sales. You see? 59. Okay, I punched that wrong. It's 65,960 divide by 273 and 70 times 365 days. So we got stock holding period of 88.16 days. Write that down. The stock holding period is 88.16 days. That's your answer. 88.16 days, which means we're holding our stock for 88 days, which means stock in our business stays for 88 days. Is that a good thing that stock stays for this much? It's not a good thing. Stock is not supposed to stay this long. Maybe it's supposed to stay 30 days and then we sell. But if it stays for 88 days, that's almost close to 9 months. I'm sorry, it's close to 3 months because it's 90 days. It's close to 3 months. So if stock stays for close to 3 months, what if that stock is stock for Christmas and then now it's March and you still haven't sold that stock? Who will buy it? Because March is already getting close and it's getting colder now. It's winter. Who will buy summer clothes in winter? So you see, it's not a good thing when a business is having 88 days as a stock holding period. It's too much. Our stock may go out of fashion and our storeroom will be having a lot of stock. There will be no space. I hope you understand. So that's the formula for stock holding period. Go back and revise because this one will obviously be there on your exam. So it's a free mark. All these actually are free marks because these are easy things. Just watch the video again and again. Try to understand. If there is anything you don't get and you are far, just comment there. I will reply and help you. If you are closer, come back to me and ask me. I can assist. Now let's move on to this one. Explain whether Gwen is the CEO. Explain whether Gwen should be satisfied with this figure or not. State 2 points. Note, the average stock turnover rate on 29 February 2020 was 52 days. You see? Actually, I've already answered this, but I did not ask it. I did not ask it. I just answered based on my experience because I know once they ask stock holding period, the next question will be comment on the stock holding period. Is it good? Now, explain whether Gwen should be satisfied or not. I don't like writing theory. I will just write points. Just simple. Gwen should not be satisfied. He should not be satisfied. He should not be satisfied. Why should Gwen not be satisfied? It takes long. It takes 88 days long to sell stock. Stock may go out of fashion. Out of fashion. What else? Workers may steal the stock because when there's too much stock, people may get tempted to steal. Workers may steal English. Workers may steal the stock. Workers may steal the stock. Another one, remember they said in February, which is last year, February 2020, the stock turnover rate or the stock holding period was 52 days, which means the stock was selling more faster. Ne? So now it's 88 days. So the stock holding period improved or increased from how many days? 52 days to 88 days, which is not a good thing. When the stock holding period grows from 52 days to 88 days, it's not a good thing. Why? Because of all the reasons I've listed here. You can copy those points down because this question will keep on coming over and over again, and you must know how to answer it. You can simply copy. I'm giving you a chance, or you can simply just screenshot and copy. Now we are moving. We are moving. Okay, let's move. We are done with the first part. You can simply check the answers. First part. We are moving. We're done. Let's move to the second part. Second part is problem solving. Problem solving is always there. For 12 marks, problem solving. So you can see they say there's a problem for 2021. We have to quote the problem with figures. Figures meaning we have to quote the problem with numbers. If you don't quote numbers, you won't get the full marks. Then after that, you have to advise the person on how to solve the problem. So the first problem will be based on jackets. We have to get problem 1 on jackets and problem 2 on jackets. Then the second one will be jerseys. We have to get problem 1 and problem 2 on jerseys, and then that is help the person solve those problems. Simple. Now let's go to our information. It's 4.3 problem solving. Let's check 4.3 here. Okay. Here is 4.3. They are saying, given Gwen Boutique also sells jackets and jerseys, Gwen has provided the information requested and advice. Identify 2 problems in each product for 2021. In each case, give 1 piece of advice to address the problem. Simple. They simply mean identify 2 problems for each product in 2021. Then in each case or in each problem, give 1 piece of advice to address the problem. Just like I did here on the table. So let's go and check the problems in 2020. They said in 2021. So let's go 2021 and check the problems. It's important because you can see here, they gave you 2020. We have to check on 2021, the problems in 2021. So on our answer sheet, they started with jackets. Let's identify problems with jackets. Okay, jackets in 2021. Let's check problems. Just teach yourself to check problems. No one will teach you how to check problems. I will just show you how I check them. But I cannot teach you how I check problems. Just by looking here, you can see problems. Let's see our opening stock 407. Then we purchased 400. We sold 550. Customers returned 0. Closing is 615. Stock turnover rate is 0.9. That's one problem that I'm realizing now. Stock turnover rate, it means how fast are we selling our stock. The higher the number is the better, which means like it's a machine that is, imagine if it was a machine that is selling our stock. So at the rate or the speed that the machine is selling, The higher the speed is the higher our stock will be sold. Or then the lower the speed is the lower our stock will be sold. Here on 2021, you can see the stock turnover rate is 0.9. It's very slow. The machine is moving slowly in selling. Just making an example with the machine. This means that our business is selling very slow, very, very slow. 0.9. Even if they say a car is traveling at 0.9, it's not moving, man. So our stock is not selling. Whereas if you compare it to the previous year, the stock was at least selling at 1.9, the stock turnover rate. So let's put on that problem. Problem number one is jackets. It's what? Stock turnover rate decreased from 1.9 to 0.9, which is not a good thing. That's one problem. So what advice can you give this person to solve this problem of stock turnover rate? What advice? Kuze ukuthi stock sakhe sichabiwe fast, so that stock sakhe basithengise fast, so that his stock is sold faster. What problems can you, what solution can this person bring? Let's check. Number one thing that makes stock to be sold, maybe improving advertising. You can improve advertising. Number two, offer discount to customers. 3, reduce the selling price if possible. You see, let's look at the selling price. This is the selling price. 630 rands per jacket, whereas in 2020 he was selling for 540. You see, that's a problem. When he's selling for 630 now, the stock turnover rate is 0.9. When he was selling for 540, the stock turnover rate was 1.9. So people are no longer buying. People are no longer buying as much. So it's not a good thing, that one. So try to moderate the selling price. Selling price. That's solution number one. What's another solution that we can give him to solve the problem? What solution can we give him to solve the problem? Yeah, that's the only thing that I can say. Another thing, he can offer discounts and make promotions. Those are other things that can use so that his stock turnover rate can improve, so that he can sell the stock a little bit faster. Now, jackets again, let's identify problem number 2. What's another problem with the jackets? Now we are done with stock turnover rate. Let's look at another problem with the jackets. Okay, what's another problem? The closing stock. There's too much units of closing stock. There's too much units of closing stock. This is due to that the stock is selling a bit slow. So there's too much units of closing stock, which means he's not selling. He's left with a lot of stock when he closes the year or the month or whatsoever. What another thing? I'm just checking at any other thing here. Yeah, I think the closing stock is another problem. The units of closing stock. Because if you check last year, he was left with 407 units. This year, he's left with 615 units. It's not a good thing. So units of closing stock are too much. Too much. Last year, it was how much? How many units last year of closing stock? Last year it was 407, this year is 615. So last year it was 407, this year it's 615. It's important to quote those numbers because they say you must identify a problem with figures. Try by all means to quote those figures. Without quoting them, you will not get the full marks. So that's the problem. Units of closing stock are too much. Last year it was 407 units of closing stock. This year is 615. How to solve that? Try to offer sale discount, like I said there. Promotion, advertisement, just all those things. Just open your mind when you're answering this. Yeah, now let's go to jerseys. Jerseys, let's identify problems with jerseys. So these are the jerseys here. These are the jerseys here in 2021. So let's look at the problem. Opening 218, 1.8 purchases, 1,970 sold, 90 units returned by customers. That's a big problem. You can't have 90 units returned by customers, which means the jerseys are having a huge problem when it comes to units returned by customers. Units returned by customers. The jerseys are having a problem. Customers are returning a lot of units. Look, last year it was a bit smaller, but still not acceptable. Last year it was 78 units returned. This year it jumped to 90 units. Not a good thing. That's one problem with jerseys. Let's put it down. The problem is too much units returned by customers. Last year it was 78 units. This year it's increasing to 90 units returned. So that's a problem. Last year they returned 78 units. This year they returned 90 units, which means there's a problem with those jerseys. How can he solve that problem? Maybe people are returning because they are not higher quality. So what can he do? Find a quality supplier. Find a quality supplier so that those jerseys cannot be returned. Then draft a return policy, a proper returns policy. Maybe their return policy is not good, so just advising they must check on their returns policy. Returns policy is the one that tells you after 30 days you can no longer return. Yeah, so that's it. Just rushing for time so that the video cannot be long. I'm done. Now let's go to problem number 2 on jerseys. Problem number 2 on jerseys. We have now dealt with returns by customers. Now units of closing stock, at least last year it was 218. This year is 138. This one has improved. What else? Stock turnover rate has improved as well, even though it's not that much bigger. Then what else? Selling price. Where's the selling price? Selling price last year it was 200. This year is 212. Not a bit much, just normal. The cost price per unit, last year it was 160. This year is 170. So it's a problem, this cost price, because last year the jerseys costed us 160 and people are not returning a lot. This year these jerseys they cost us 170 and people are returning, which means we are paying a lot of money for products that are of lower quality. That's another reason. So let's check another one. Income from sales. You can see the income from sales has decreased. The income has decreased even though the selling price is too much than last year. So I will put that off. Sales income, the money from sales. Let's say your income from sales has decreased from how much? Income from sales has decreased from 436,000 in 2020 to 349,000 in 2021. So it's 346,400 in 2020 from 346,400 to how much? To 349,500. 349,500. So how can you solve this problem now? The problem of sales amount being smaller than that of last year, even though the price that we are selling with is bigger. How can we solve that problem? Obviously, it's somehow linked to the returns, but how can you solve the problem of sales amount being smaller? Like I said, order quality goods. Number 2, offer discounts to improve sales and have an accountant have good internal control in terms of the sales amount being deposited. There are a lot of you can write here, man. There's a lot of things you can write. I'm just summarizing and browsing. So that's it, guys. We're done with our paper. The total was 35 marks for this question. I believe we got it all. That's your 35 marks. You can actually get it. Simple to pass this accounting thing. Simple. Just practice these papers. Practice all of these papers. I've given you a website where you have to download the papers. This is the website, stenmophysics.com. This is the website, stenmophysics.com. That's where you are supposed to download the paper. And this one is DBE 2021. Go and do it again on your own. If you're having any difficulty, consult the video and do it again up until you understand each and every concept that we dealt with here. This one will help you pass with better marks. So that's it for today, guys. Don't forget to also like the video, even though the channel is still new, but just make sure you like after watching. If you do appreciate the content and the time that I'm putting here, you can simply like there. You know, this YouTube thing, they are having these algorithms, or we can say softwares that are tracking the accounts. When an account is having a lot of likes, that account will automatically be promoted by YouTube to appear in most people's YouTube apps, if I can put it in layman's language. Yeah, so the more you like is the more you are helping actually this content to reach even more grade 12 learners. Because now if it is having few likes, only few grade 12 learners can be able to come across it on YouTube. So help your mates, share this with your mates, and subscribe to the channel. If you're having any questions regarding accounting, you can simply leave a comment there, or you can ask me. If you are closer to me, you can simply ask me. Yeah, that's it, guys. Just keep on practicing. This is your future. Take care, stay healthy, exercise, drink water, stop eating junk food. Yeah, stop eating too much junk food. Take care of your bodies, eat healthy, stay sharp in your brains, and exercise. Always study. Keep your brains as good as possible, because your exams are coming. Just exercise some good habits, proper habits. Then you will see the world will be yours. Thank you.